Okay, let's go right to it. Let's break down today's market action. With our panel, we have Joe Bell, Schaeffer's investment research senior equity analyst. He says the market top is nowhere near in sight. And Robert Zagunis is Jensen Fund's co-portfolio manager. He's here to tell investors what kinds of companies to add to their portfolios to protect against any potential downside of market. Could happen. Todd Horwitz down in the pits of the CME. He's seen it coming for a long time, but so far the market hasn't been listening to Todd. Todd, I want to give you a little bit of credit, though, here, because you have been forecasting some kind of market drop that we haven't really seen yet, except in January. We came back from that. But let's talk about the average folks out there. Janet Yellen spoke to this. She was talking about unemployment. She said nobody has been unaffected. Everybody has somebody who's lost a job or worried about losing their job. And let's talk about the average folks who are making less money. She also talked about that. The average money that people are making is less now than it was 5 years ago, but they're spending a lot more money in things like food and gas and other necessities. Someday that's got to catch up with the market, right?
I think so. Hi, David, and hi, Cheryl. You know, when we look at the big picture, people are making money that they were making 10 years ago. So, now, where's gas? Where is food? I mean, today, I filled up my tank today. It was $112 to get gas. I got my electric bill, or my gas bill for last month's heating, $800. Where is the money going to come from to continue to support these kind of expenses? You know, we talk about no inflation in the market, and no inflation because of the way that we keep score. But the truth of the matter is the average guy has a lot of problem because they're paying a lot more for the goods and services that they use. And our reports exclude food and energy. What do we spend the most of our money on? Food and energy. So I think that this eventually is going to create a pretty big problem along the road. And I do believe that this is a house of cards that the Fed is continuing to try to borrow its way out of debt. And it may not be today. And I have been on the sidelines since about 1740 looking for the market to sell off. And at some point it will, but I'm not going to fight it here, but I'm certainly not going to bring new money to the table here either.
Well, Joe Bell, I mean, here's the thing. I mean, you've been, fairly bullish on the markets, but pick up on what Todd's talking about here, that there are headwinds, some of it, maybe Fed caused, to be honest with you. Does that kind of give you pause about your position on equities right now?
No, not at all. And I'll tell you why. I think those are concerns about the economy. But when we're talking about the stock market, we're talking about two things. We're talking about price. Price is what pays, and we're talking about expectations. How low or how high is that bar been set? We're talking about price. Let's not forget, we're in an incredibly strong uptrend. And oftentimes these trends, it takes a lot for them to reverse. They often last longer than most people believe. And historically, the major market tops happen when we have that overwhelming amount of optimism. I'm seeing a lot of skepticism. We've been hearing for quite some time this is only a Fed-fueled rally. There's a ton of skepticism out there. A lot of people continually looking for, is this the market top? What's going to cause the market top? Historically, that's not what we see when we get market tops. We see that euphoria. And I'm not seeing that out there right now, and that's one reason why I don't think this is the ultimate top right here, right now.
Robert, the market, you can't separate it from the economy. Companies get their money from people operating in the economy. And the Fed just today announced they are lowering their growth rate expectations from 3.1 to under 3%. It could be well under 3% when the year ends. Eventually, if people aren't buying, companies aren't making the profits. They've already squeezed their operations to the point of practically strangulation in terms of the number of people they're hiring.
Well, that is true, but I think like a lot of things in the markets today, you have to sort of segregate different parts of the market. And I think there's a number of companies that are actually doing quite well. And in light of the Fed's sort of reaction today, they haven't changed their approach too much. And there is a consistent positive drumbeat, not only with their approach, but then with a lot of companies that continue to do really remarkably well. So across the board, there may not be that much hiring, but there is some robustness in certain segments of the market.
Well, Todd, pick up on that because you think that this is, that we're all missing the perfect time to sell. This is the day to sell. But he's saying, no, companies are doing well. Companies are strong. We're on target. How do you respond to that?
Well, I think if you look at individual companies, now, again, when we're talking here, I'm talking about the big market. I'm looking for stuff. Individual companies can perform very well when the markets are not performing. As I see as an overall big picture, I don't see growth. I see a lot of problems. We talked about copper last week. Copper is still at 5-year lows. That's a problem. You call it Dr. Copper. We're not building. We're not constructing. I know the home builders had some good news this morning, But what I really want to know is where are the people going to borrow the money? Because although the rates are low, the average guy is not available to get that money because the banks won't loan it. And why would they? They're going to take the money from the Fed at 0 and give it back to the full faith and credit of the United States government at 2.7. So why would they loan them at? Jobs are at a premium. They're hard to find. Yes, more people are looking, but the overall picture is still very murky. Is the top today? I don't know, but I think there's a lot more risk to the downside than there is to the upside.
However,